Over my last 7.5 years being a trader myself and also working as a performance coach and as a consultant to prop firms, to in-house prop firms, to education companies, to working one-on-one with a wide spectrum of traders, some not so good ones, some very exceptional ones, there is a key lesson that has stood out for me, from my perspective, that I would love to share with you today. And this key lesson is really what I see differentiates unsuccessful amateur traders to successful professional traders. Traders who ultimately come to the market and consistently extract money from the market. This is what they're doing. And those traders who are stuck at the break-even dance and struggling to pass funding challenges, struggling to get payouts, struggling to consistently make money from the markets, this is what they're not doing. So I want to give you an overview of this, and I want you to take on board this idea and take on board the tool I'm going to give you at the end and use it for the next 30 days and see what type of results change and see what happens to your trading. Because I can guarantee if you implement this principle properly, it's going to make a positive change in your trading results. So one of the key principles that I would love to start with is that there's a very big difference between you, the virtual market in your head, and the real market. Now, I wish I had some level of artistry or creativeness or good drawing skills, but I don't. So I'm going to do this as best I can. Let's imagine this is you, and let's imagine this is your laptop, okay? Maybe you are at a standing desk, because I don't know how to draw people sitting down, and this is your laptop. Now, you in your mind have what I'm going to call a virtual market. And we can do this like this, virtual. And you are at your laptop trading, supposedly, the real market. The real market is where everybody participates. The real market is where the true risk is. The real market is also where you can make the true money. The virtual market is the market in your head. It's not real. There's no real risk except emotional volatility, and there's no money you're going to make there. So what traders need to do is they need to learn to differentiate between the virtual market and the real market. Because what I've seen the amateur trader is doing, the inconsistent trader is doing, is they're creating ideas in the virtual market. We can just call this V for virtual. And what they're doing is they're then projecting those ideas from the virtual market to the real market. They've got an idea of what they think is going to happen next, and they then project it onto the real market. So in other words, these traders have an idea in their minds, an expectation on a certain price over a certain time, and what they're doing is they're then projecting this idea or this outcome-based expectation onto the real market. And they've created the idea or the fantasy in their mind, but then what they're doing is they're then coming to the real market on their laptop and they're putting the real risk on in the real market. So just think about that for a second. They're trading the virtual market in their head, but then they're risking in the real market. So there's a discrepancy here. They're thinking about the virtual market, which they've created in their mind, on the outcome of the fantasy of the pleasure they're going to make, the profit they're going to make, the funded account they're going to get, the recognition they're going to get, and then they're just projecting it onto the real market and they're taking the risk on in the real market. Now, whenever they set these expectations and they project it onto the market, they're blocking out the information the real market's trying to communicate to them. The market's trying to communicate information to them, but they're not listening to it and they're not aware of it because their projections of the fantasy is so great. the fantasy on the outcome, the profit, the potential, the funding they could get, that fantasy, that pleasure in their mind they're thinking they're going to get is so great that any information that runs counter to that, they don't want to take in. Confirmation bias and disconfirmation bias. So the amateur traders are caught trading the virtual market in their head, projecting unrealistic expectations onto the real market, unaware of the risks and unaware of what the market's trying to communicate to them. That's an amateur trader. So what happens to their results? Well, they can't have consistent profitability because they're not listening to what the market's trying to do. They're not trying to be aware of what the market's communicating, the next moves that are going to happen, and instead they're trying to project their ideas onto the market, so they can't have consistent profitability because they can't tap into the flow of what the market's trying to communicate to them. So what I've seen the professional traders are doing is they're at the desk their standing desk with their laptop. This is a pro trader. And what they've done in their mind, even though they may still have some level of a virtual market, they've quieted it down. I'm going to explain where the virtual market comes from and how you can do that. And what they're doing is they're present with the real market. And because they've quieted down the virtual market in their head and they don't have all these unrealistic expectations or fantasies or ideas on the outcome, what happens is when the market presents an opportunity to them and the market's communicating something to them, they're able to receive that. They're able to interpret it. They're able to understand it. They're able to objectively see the information, and what they do is they're so aware of their trading plan and trading processes, they can see, does this, what the market's communicating to me right now, does it align with my trading plan? Does it align with my trading processes? And if it does, they can clearly and objectively make a decision moving forward. So they're able to listen to the market, interpret what the market's communicating to them, objectively look at that data and objectively look at their trading plan and execute if the market right then in that moment is presenting an opportunity that is in alignment with their trading plan. That doesn't mean they don't have some level of an outcome-based expectation, but what they do is they ground them. They see the outcome-based expectation in their mind and have such a level of self-awareness that they realize that on this individual trade, nobody, not even me, this is what the professional trader is saying to themselves, not even me with all these years of experience can predict what's going to happen next. Nobody knows what's truly going to happen in the market. I don't really care about the outcome of this individual trade. What I care about is listening to the market, and if the market aligns with my trading plan, I'm going to execute on this individual trade with my risk management protocol, because that's what I've tested and that's where I know my edge is. So a professional trader is process-based. They're aware of their outcome-based expectations and they actively work to ground them. They're present with the real market and they're present with their trading plan and trading processes, which are both proven. They've proven their edge and they've put it into a mechanical trading plan, which allows them to consistently come to the market and consistently execute on their trading plan. Now, this is exactly why I've put the Bulletproof Your Mindset tool together. The Bulletproof Your Mindset tool, which is a free tool in the link in the description, helps you transition from an inconsistent amateur trader to a professional, consistent trader, because the tool helps you become aware of your outcome-based expectations and fantasies And it takes you through a process of grounding those outcome-based expectations and fantasies with a questioning process, a line of question, and it allows you then to really question, is this part of my trading plan or not? So the tool that I've created for you, free link in the description below, download it and start using it for 30 days, see what type of difference it makes to your trading, is actually helping you follow the thought process of professional traders. That's why I put it together. It helps you ground outcome-based thinking that caught up in the virtual market, helps you get present with the real market so you can start making consistent decisions that are in alignment with your edge and ultimately have consistent profitability as a result. I hope that makes sense. Now, your ideas in the virtual market that are prevalent on the outcome of, I want this outcome is going to happen, it's going to be pleasurable, it's going to be positive. These ideas come from what I call subconsciously stored information. If you've had a very pleasurable experience in the past of taking a win and that's stored in your subconscious mind, then what's going to happen when you come to the market and something somewhat resembles that in the market right now, you're going to be reminded of that previous pleasurable experience, and then you're going to want that again. You're going to project the expectation that's going to happen again, and you're going to have desire to have that. And that whole process of all the subconsciously stored baggage in your mind over previous pleasurable wins and painful losses, what's going to happen? That's going to stop you from being present with the real market. Because you're not present with the real market in that moment. You're thinking about the pleasure of that previous win. So too, you can have a painful loss in the past that's logged as a painful memory in the past, and you're trying to avoid that pain by trying to seek after something again in the virtual market. Again, that's pleasurable. So the subconsciously stored information in your brain is what drives unrealistic expectations, and it's what stops you from being present with the real market, and it's what stops you from having consistent profitability. Now, the scope of talking about the subconscious mind and giving you the tools and the coaching and all that type of stuff to address it is far too much for this one YouTube video. I've put together a complete masterclass in my 12-week program. If you're interested in learning more about that, check out the free 7-day trial in the link below. But hopefully this gives you an understanding of what's happening in your mind before you take a particular position. What separates the amateur from the professional? What you can do to help transition that and go from being process-based to go from outcome-based thinking to process-based thinking using the Bulletproof Your Mindset tool. But just understand, if you don't address the root cause, which is the subconsciously stored information of pleasurable wins in the past and painful losses in the past, you're going to continue to create ideas in the virtual market, you're going to continue to project onto the real market, and you're going to not be able to be tapped into the market's information that's trying to present to you. But hopefully this gives you an awareness of what's going on in your brain, and it helps you start to make that transition from amateur to professional, from outcome-based to process-based, and it helps you go from being inconsistent with your results to being consistent with your results.